Hello and welcome to Fireside Chats at the Influencer Series conducted by the Alchemist Accelerator. These are timely chats with tech leaders about what's on their mind. Let's get into it. We are here with Tom Gwinn from Evonik Venture Capital. Evonik VC is the VC arm of Evonik, the German specialty chemicals company. Tom is one of those rare birds that can have a leg deep in tech and also a leg deep in legal and patents. Tom has a bachelor's degree from Caltech in EE, then a master's in EE from Stanford. And if that wasn't enough, he also then got a JD from Stanford and has worked in patents, venture, and a whole bunch of different industries, and now is an investment manager at Evonik. So it's so good to have you, Tom. Tom, what are you talking about today?
It's great to be here, and I'll start out by saying that I got into everything I've gotten into in the first place because as a kid, I wanted to see physics and chemistry and biology change the world. So what I'm going to be talking about today is one of the biggest impediments to seeing that happen, which is the deep tech funding gap. How really promising startups can fail to receive enough capital even after they've shown promise. In that Series B, Series C area, and the effects of that and how corporate venture capital can perhaps help change that.
And so this is such a deep problem, and I completely agree with you because there's systemic issues that prevent deep tech from flourishing as much as it should. So do you have an answer to that tension that you posed?
I will say that I think that whatever is done has to be a cooperative effort. There's no easy solution here or would have been solved because these are big topics. The topics that are affected by this funding gap matter for all of humanity. Things like medicine and climate tech and quantum computing, big topics. I do think, though, that corporate venture capital firms are in a more flexible position to perhaps achieve some of these cooperative effects in a way that traditional VC hasn't been able to do. So whether that's things like joint investment vehicles or more flexible equity agreements or things like guaranteed customer contracts. All of these are ways that startups can help get to that CVC can help startups get to a place where they bridge the funding gap.
Can we double click on some of those and just expand what we mean by those? Because I don't know if everybody's familiar with these ideas, and I'm curious how much of these what the life cycle is of these or the current manifestation of these ideas are, if they're theory or if you've seen them in practice. So maybe we can go through each of, I don't know if those were in rank order of what you think is the most promising unlocks to solve this problem. If that's true, maybe you're saying the first one was joint venture or what do you think, before we jump into that, are there any key unlocks that you think will usher in more capital to promote deep tech from the corporate side?
Well, I'll start and just say that this is something that can be solved by enough patient capital. And so when you have will and you have money, that can be enough. Mm-hmm. And so I would say certain industries are already doing this on their own and maybe don't need as much help. Mm-hmm. So the semiconductor industry, maybe to a lesser extent, the automotive industry, but those are places where you've seen CVCs, and of course pharma, mm-hmm. Where you've seen CVCs willing to put $100-200 million into a startup to bring it from that seed location to somewhere that traditional finance is interested. Mm-hmm. So that's certainly one way to do it. Mm-hmm. I don't know that is accessible or palatable in all industries, mm-hmm. Either because a lack of history or lack of will, but as a result, I'm kind of interested in alternatives to that, even though that I think has shown to be effective. Mm-hmm. To your second question, to what extent this has been done? Mm-hmm. I think most of the things that I'm going to talk about today have been tried in some form.
Okay.
I don't know that they have been tried, I would say, with intent and over long-term time horizons in most cases.
So let's walk through those. What do you think is the most exciting idea that we should be ushering more of in?
I really love to see cooperation among corporates to support an entire ecosystem.
Okay, so say more.
Yeah, so I think it's understandable for traditional companies to not necessarily, at the very least, be used to pouring tons of money into a field that they may enter in 10 years mm-hmm. or something like that. Maybe areas that are really, really used to frontier technologies, as I mentioned, semiconductor and pharma, they're more comfortable with that. But outside of that, legacy industry, that they're not so comfortable with that. By cooperating across multiple organizations, you have a way to diffuse risk. And I also think that you enter a classic scenario of growing the pie. Everyone gets a bigger piece. So less risk and more palatable to existing structures, but you still get reward.
Can you add more detail on what that actually means, what that looks like? Are you talking about having a bunch of corporates fund a industry-focused fund that's investing in things that are 10 years out, or is it creating a new structured vehicle of investments? Or can you just walk me through exactly what this is?
I think a fund would be one way to do that. But I think there are a number of avenues that could work. So you could have something that was like a milestone-based prize award, for instance. That would be another way to do it. I have known some organizations that have tried approaches that are similar to like privately replicating DARPA or ARPA-E or something like that. You could see corporates doing something along those lines too.
You mean just like an outright grant of money?
Yeah, that's right.
For no equity?
That's right.
Okay. And why would the corporates do it? Or why should they do it?
I think that's a great question.
Yeah.
And I mean, from my perspective, it would come back to growing the pie. So let me speak a little bit.
Yeah, please actually, detail it out.
From my perspective at Evonik, which is we have over 20 lines of business across all different kinds of advanced materials. And working in the corporate venture capital unit, a question that I get asked frequently is something like, hey, can you help us go find a great startup in crosslinkers so that we can make our crosslinkers more effective, or we can make them more sustainable? And I have to go back to my corporate parents and say, like, there are startups and crosslinkers. They're not going to be startups and crosslinkers because that's not a field that's attractive to venture capital investors. But if we viewed something like crosslinkers as really important to, say, like the next generation of polymers, or you can fill in your industry thing here. I think it would be worth it maybe for us to put $10 million or $20 million into something it could be grant-based, it could be equity-based. I think a number of structures work, but we're saying, like, we know that this is not going to come about externally unless we do something.
And there's a market gap, because if this was truly profitable, wouldn't the capital market solve for it by itself? Because the cynic would be that this isn't a profitable idea. If it was, the market by greed would do it, and people would fund these things. So either it's not profitable and the corporates are going to be funding something that the private market doesn't deem to be attractive, or there's some market asymmetry that you'd be arguing that's happening. So
I would say that there are probably companies that could be really profitable and have huge margins and are passed over because of like a lack of information. But maybe a lot of companies are like you're describing. I don't know that I would say they're not profitable, but without an external support structure, they don't make sense.
Is it because of the time horizon? Because venture funds are operating on these 10-year time horizons, so it may be profitable, but it'll be profitable in 20 years, and that constrains.
I appreciate the softball there. That's definitely that's one characteristic here. But I would also say too, like, you're not necessarily from a corporate innovation perspective, you don't need something to be, the next unicorn, right? So you talk about difference in time horizon, but there's also a difference in terms of like return expectation or like market size need. So again, I don't necessarily think these things will ever be attractive. Some of the things that I'm mentioning will ever be attractive to traditional VC. But with the support structure of, say, like a ready acquirer that really wants this technology, that's a different situation.
Okay. And so that's one. So one model is that you create a consortium that all aligns in agreement with an area that's strategic and critical, and for a variety of reasons, it has a funding gap, will not get funded, and that consortium commits to fund that area. And if I'm interpreting that correctly, what's preventing that from happening right now? What's the catalyst that's needed to create that?
I don't think there's anything that's preventing it from happening from a structural perspective. I think that there's maybe a slowness in legacy industry of understanding the criticality of startups for a world that's changing more and more rapidly every day.
Okay.
So I mean, like from a materials company perspective, but I think this same perspective affects a lot of companies. Decarbonization changes everything. So like if we're gonna start making materials without petrochemicals, like that's not there's no linear step from where we are right now to there.
Yeah.
It's a completely different
paradigm. Yeah.
Right. So how do we make all of these materials, none of which on their own probably have a big enough market to be independently venture fundable? how do we do that without, investing massive R&D dollars ourselves and doing it internally? Or like, what's the answer to that? I think that something has to fill in that gap there.
And it's something that it would be benefit if the risk was amortized across multiple players.
Yes,
that's the idea.
That's right.
So is that the critical next step, is to get somebody to?
Well, I want to talk about something else.
Okay, go, please.
Yes. So one thing that we've been talking about is, what about these companies that ultimately are not fundable?
Yeah.
Under a traditional venture structure. I think there's also companies that are, but are missed. And maybe there's but let's talk about, for instance, industrial biotech right now. So we're in a position where traditional VCs were really interested in the space. The market was big enough. The timelines were underestimated. And so I would say, like, now broadly, a lot of people don't want to touch it at all. So how could corporate VC help here? De-risking is the answer here. So in the first category, it's like providing capital to businesses that aren't going to get it otherwise. But there's also another role here, which is using your expertise or your network or your infrastructure to make businesses that could ultimately be attracted to venture capital more attractive through de-risking or otherwise.
Through commercial de-risking, or using assets that the company has beyond cash.
Yeah, it could be commercial de-risking. It could be technological de-risking. Okay. So like whether that's, you could be de-risking by saying like, I'm a ready customer. You could be de-risking by saying like, I'm providing financial support over a longer time horizon. You could also de-risk by saying, like I've spent 10 years of really important technical research, and this is the direction it's going, and this is why we're supporting this company. So like using knowledge as a way to do that as well. But hopefully, you make investors that are not as familiar with the space. And when we talk about deep tech, we're not talking about one space. We're talking about many, many, many spaces that financial investors may not be familiar with. You're helping bring familiarity there, and you're helping bring comfort to investing in a space they're not necessarily familiar with.
Okay. Well, and what are the other? I've got a couple questions, but I don't want to preempt the other unlocks. What are the other key things that you think we need to be doing more of to facilitate this?
So I guess I talked about cooperation.
Yeah, there's joint venture cooperation.
Yes, there's joint venture cooperation. I've also talked about de-risking from a knowledge perspective.
Yeah.
I mean, those two are kind of the big ones for me, and then there are enabling players for those as well.
Okay. How do you get competitors that are interested in the same industry to cooperate to get the industry to take off? So if you're thinking about automotive as an industry, I know this is sort of a false analogy here, but if there were companies that were going to become the GMs and Fords and let's say Daimlers of the world, and they depended upon some auto technology before auto technology's times, ideally they would all be investing in that, but then they would be competing against each other once that market came to play. Is that an issue, or is that?
I think that's becoming less and less of an issue, and I think you can see that. I think you see that in the automotive industry. I think you see more willingness to do joint cooperation.
Yeah,
I see it in the semiconductor industry, and I see it in the materials industry as well.
Yeah.
I think companies are realizing that there are really big changes coming. They're not able to handle everything in-house, and there's more than enough opportunity to go around.
Has a bottleneck been also that the strategics all have depended in the past on the VCs to lead rounds, and in industries where the VCs are less knowledgeable than the corporates, there's this disconnect because no one is stepping forward to price the rounds? I'm speaking a little bit from Alchemist. We've actually had some quite successful deep tech companies that have managed to basically create a lead that other strategics could then follow. And the bottleneck was actually just getting that lead instrument to get then all the corporates to join in. I don't know if that makes sense.
No, okay. It does. Okay. I think it can happen. I think there are a lot of things that could happen. I view that as like one of maybe 7 scenarios.
Okay.
Don't ask me to list all 7. That's certainly helpful.
Yeah. And so I love the aspirational ideas here. Is there anything tactical that you would encourage the CVCs that may be listening to this right now to do or explore that could help?
I think like really the what I would love is a real reckoning with what does your 10 or 15 year plan look like, and how are you going to do it on your own? And if you're not, what are you going to do? It feels like many corporates have not had the come to Jesus moment yet of or they have and they just don't have an answer.
Evonik, do you classify Evonik on the financial to strategic spectrum of a CVC?
Very strategic.
Very strategic. So can you speak to what's your, when you're defining your 10 to 15 year plan, are you just an extension of the parent company, or are you guys doing it separately as a VC group? How do you tactically do that?
Yeah. Okay. Very, very complicated, but I would say first that the plan that I was talking about was the corporate parents plan, rather than the venture capital units plan. Of course, we have our independent plan that's in support of the broader plan, but I think the disconnect is at the broader plan level, not at ours.
Okay.
I would suspect that most corporate venture capital units are more connected to the need for external innovation than perhaps their corporate parents are, by definition almost.
Yeah. Is that a tension that you face or that you guys feel at all, where there's a push from the CVC to be more innovative and disruptive and the corporate doesn't see it?
Yes, that tension is always there. But I feel like it's less, the primary tension results from like a lack of understanding rather than like a difference in goals or a difference in beliefs.
Okay. So you guys are aligned at the fundamental level.
I think so.
Okay.
You know, and I think both the corporate parent and, the venture capital unit, in our case, but I think in general in CVC, like we want to make things better over that 10 to 15 year time horizon for ourselves and for the startups that we're working with. And I think that's pretty good on alignment. I think the disconnect comes from, maybe the corporate parent doesn't view VC as top of mind for their 10 to 15 year plan.
And you would argue that in fact it's critical.
Well, if we're talking about an industry like ours where, you suddenly have to replace, maybe 30-40% of your products with something that you have substantially less expertise in making, probably external innovation is really important.
Any specifics or tips on having that conversation with the parent company as the CVC when you're trying to unlock more support?
I feel like the primary tip is just the obvious one, which is like, this is a relationship-based endeavor and a relationship-based business. Relationships are king, and that relationships enable you to like have the kind of conversations that matter. If you have the relationships, you have the conversations. I think that works really well. When there's a breakdown, it's because you don't have the relationship and you're not having the conversation, as opposed to you're having the conversation and corporate really disagrees.
Okay. Any other things that you wanted to share that you're discussing today that you want to share?
Just really excited to be here and hear everybody's perspectives.
Okay. And then the way we've been ending it is, if you want to, you can share a 6-word takeaway, like a final 6-word piece of advice in 6 words or less. This comes from the old adage where Ernest Hemingway was sort of tasked with writing a novel in 6 words. Do you want to share in 6 words or less a final takeaway?
Yeah, give me 1 second.
Yes, no worries.
Change keeps accelerating. Invest more externally.
Awesome. That's great. Thank you, Tom.
Thank you so much, Ravi.
Yes. And that's our show. Thanks for listening. Please stay tuned for more discussions as well. You can also check out our website, alchemistaccelerator.com, to learn more about the Alchemist Startup Accelerator program and to get in touch. We'd love to hear from you.